quote this session. All right, let me start with the very first one. We we are continuing, preparing ourselves for the impending exams, of course, the final examinations. And what we are doing is that we're going through the past paper questions just to equip ourselves, you know, and so that we can get to understand what is expected of us doing. And we started looking at the 2021 paper. We did question one in the previous conversation. And what we are doing as of today, we want to do question number 2. Let's start from question number 2 of today. Confirm you can hear me clearly and also can see the screen. Anyone to just do that confirmation for us?
I can see the screen, but yeah, a bit low. I don't know what's the problem. What could be the problem?
Oh, I am low. You can't hear me? Is it the case with everybody? Is it the case with everybody that you can't hear me clearly?
I can hear you perfectly well.
Okay, thank you very much. I guess maybe, sir, you may need to increase your volume or something. Maybe, yeah. Others are confirming that they are able to hear me clearly. Okay. Let's now get started. And I am reading the question in your hearing. Here's the question that we do have. The life and health insurance sector, has seen the introduction of numerous products, and these products are aimed at meeting policyholder needs. Okay, so a new product has been proposed for launch in the consisting of the following 5 sub-products. This should be a giant product, eh? It's one product. This is a product that has been launched, and actually this product has the following, sub-product in it. This will be giant. Now, look at what is contained. Number 1, funeral cash. And so according to the product, we are told that up to 21,000, amount is immediately paid out as funeral cash. So that is funeral cash. Yeah, you can get up to 21. Then the other one, these are just the features we have. Personal accident cash. With personal accident, we are told that an additional 42,000 is paid out for accident death. All right, according to this product. Number 3, groceries cash. We are told that up to 21,000 worth of groceries
You're breaking, sir.
For 1 year. Number 4, school fees cash. With this one, up to 21,000. All right. Apologies for that. I'd been kicked out by this network of theirs, right? And now we continue. I was on a part where I was talking about these sub-products. Can you hear me clearly again, one more time? Are we good now? Are we set to go? Can we make further adjustments?
Yes, we can hear you,
Is there
but
any?
you might need to go back a little bit.
Okay. No, I'm talking about the sound. Can you hear me clear? Then we can still get back to that.
Yes, yes, yes. You are clear now.
Okay, thank you. So I was saying, for the life and health insurance sector has seen the introduction of, the numerous products that are aimed at meeting the policyholder needs. Right? So there is a new product that is proposed for launch in the local markets. And it has the following sub-products. Up to 21 go details is paid out for actual groceries are paid for. The school 21,000 school fees are paid direct to the school for your children or for your child who is or are aged below 25 years. We also have another feature, the last one. This one is hospital cash. Up to $30,000. Quite interesting, right? Up to 30,000. Oh, how is this one reading? 30,000 kwacha dollars. Okay. It's interesting. Okay, let's look at, okay, let's interpret it as kwacha. Up to 30,000 kwacha paid for up to 3 days spent in hospital at 500 kwacha per night. Okay? At 500 kwacha per night. So now, I think there was a mistake in the way how the numbers were put. Anyway, don't worry about the numbers. Let's continue. Can you still hear me?
Yes, we can hear you, sir.
Okay, thank you. Let's get to the additional notes. The premium payment term is 20 years. That is the period of paying the premium. And for all ages, monthly premium is just 200 kwacha per individual. For members, spouse, and children under 21 years, and the cover is open to individuals or even to the groups. Extended family members and children above 21, they pay a monthly premium of 500. So I was told that monthly premium for the school fees benefit is 50 kwacha and applies to the legal dependents that are aged 25 years and below. Personal accident cover or hospital cash monthly premium is 30 kwacha and only covers the principal member, only the member. So these are some of the features, and now further details are given concerning those the package or on top. So now, here is the work. For each of the following, for each of the features of the above sub-products, okay, can you outline the needs that it is intended to meet under the scope of life and health insurance? For each of the features of there are features, these are features that are here. You have the features. You have the features of these sub-products. Okay, so for each of them, can you outline the needs that it is intended to meet under the scope of life and health insurance? What specific needs I intended to be met by this one. So let's start. We can start with funeral cash. Let's start from the top one. The funeral cash one. What are the comments from the people? Hello, you can just turn on your mic and just tell us what needs, what needs do you think this is intended to meet under the scope of life and health insurance? Yes, you can go ahead. Hello, you wanted to say something?
I was saying what is a capital
I don't know whether it's my network. The line is cutting. I can't hear you.
May I come in, sir? Hello.
Yes, you can go ahead now.
Okay, I think the funeral cash has to tackle the funeral needs, such as the coffin, the graveyard, and other logistics.
All right, thank you very much. Is there any addendum from someone else?
Glossaries, and also it covers for the belief bereaved.
Okay. All right, thank you very much for all the contributions on funeral cash. That is up to 21,000, which is paid immediately. Now, the need that is being addressed, as you have already put it, this, the benefit, it addresses the immediate financial burden, that families usually face after the death of a loved one. Most of the families usually they face some financial burden, yeah? Yeah, they face some financial burden after the death of a loved one. So now, what this does is that it supports the funeral arrangements, such as maybe transportation, burial costs. You have already talked about things like caskets, among others, and associated traditional and religious practices. It falls under life insurance, as it does provide, it provides the payout upon the death of the insured person. You have gotten that one? So it falls under life insurance. Is there any question on this one? On the need that it addresses? Immediate financial burden that is faced upon the death of a person, right? So transportation, the burial cost, all those costs that are associated with that, traditional religious practice, everything is captured under that. It falls under life insurance. Any question? Do we have a question on funeral cash? Okay. All right. So that's it. That's what is captured under the funeral cash. We can then move on to the personal accident cash, the 42,000. Someone wants to pass a comment on this one? Personal cash.
Yeah, maybe just trying.
Yes.
Yes, personal accident cash. This could be under, my understanding could be under general insurance, and that it caters for probably could be comprehensive, knowing that it also caters for even maybe the other person, maybe who might maybe yeah, even to the point where somebody has died. So it's under, I think, should be general insurance. Oh, the question says it must be okay. But okay, that's what I felt like. It caters for general insurance, and that it should be comprehensive because it caters even for the other part. That's
Okay.
my understanding. Yeah. So the need is that
Mhm.
yes, sir.
You can continue.
Yes, sir. The need could be that
Right.
yeah, network.
Okay. Thank you very much. Hello, are you still there?
Yes, I can get you, sir, now.
May
You
I
can
also
continue.
comment, sir? Oh,
Okay. If it's done, then you can go ahead.
okay. Looking at the last part of the product, the statement says additional 42,000 kwacha paid out for accidental death. So this is something you did not anticipate. This person was not sick, but all of a sudden, this person passes on. So this product now comes in to offer financial support to the bereaved family. This is my understanding.
Oh, thank you very much. Is there anyone who wants to add to the answers that are coming? Personal accident, cash. What specific need is there to be addressed under life and health insurance?
Well, like everyone is saying, this product addresses the financial burden that can arise from an accidental death, like they are saying. So this can help the surviving family cover outstanding debts, even just living expenses. So basically,
Yeah.
it comes in to cover the financial burden that the surviving family can be facing due to the unexpected loss of a member. Thank you.
You're welcome. Thank you so much for that contribution. Okay, so all the answers are correct. Yeah, the need that is addressed for this one, it covers accidental death, as you have already said it. And you know that the accidental death is typically sudden and usually it's not expected. So you have the payout that ensures there is some, financial stability for those dependents that you have, including the next of kin. So there is the part of insurance that it falls is life insurance. Okay, it's part of life insurance. It's an extension of life insurance where they've added accidental benefits. So where they are trying now to help you in terms of giving you income, the debt settlement, among others. But basically, that's the focus of this particular one, the the personal accident cash. Okay, we can go on to the grocery, cash. Grocery is cash. What is captured under groceries cash? What needs does this capture? Of course, under all your answers, please relate them to, the question is saying, I reread the question, outline the needs that it is intended to meet under the scope of life and health insurance. That's what the question is asking you to do. So thank you very much. You can start. Groceries. Know them. Let's just discuss them. What does the class think on groceries? What needs? Are we still connected? Hello?
Yes,
Yes.
just to try,
Yes,
just
go ahead.
looking at the first phrase which says groceries. So for me, I think this one covers what? My daily living expenses. So yeah, the insurance company will help provide groceries, maybe for a certain period of time. Yeah, that's what I think.
For 1 year. The question has the statement says 1 year. Thank you very much. Is there any addendum to that? Do we have an addendum to groceries?
Yeah, maybe just a contribution, just an addition to what Madam Veronica has just said. This one should be probably under life insurance. Yeah, so I think the idea is that in case the principal or the person has died, they should be able to be catered for in terms of groceries. I think it probably falls under, I think we learned that, whereby maybe somebody who has been probably injured, and then you don't want to you want the flow of funds, maybe you were paid and you want to continue to be paid like that. I don't know what I have just forgotten the type of insurance that we mentioned, but it's under life insurance. The main one is life insurance.
Okay.
Yeah, that's my understanding. Yeah, sure.
Thank you very much for that one. All right, colleagues. Thank you. So as others have already put it, what this does, it gives sustenance, support to a family that has just lost their, for example, breadwinner. So what they do is that they ensure that they help this family not to suffer from food, from food insecurity during the difficulty, adjustment period. That's what they try to do. They don't want them to die from hunger or suffer from food insecurity. So, of course, this, as he has already put it, it is part of life insurance. Okay, they're extending, they're extending help to the living dependents, giving them at least the help so that the livelihood can continue. That's basically what is going on. So it is to provide food, ensure that there is food. So they give you food. When you have this one, when someone dies, for 1 year, they'll keep on giving you groceries, They'll buy for you groceries. You don't have to die of hunger because maybe and it will help you guys to settle properly as you are still settling. For 1 year, you will be receiving groceries from the insurance company. Okay, so basically that's what is going on. Okay, we can move on to the school fees, School fees, cash. How does this one work?
Okay, may I come in, sir?
Yes, you can go ahead.
Okay, so this one falls under life insurance, according to my understanding. And this 21,000 is paid directly to the school for one's kids below the age of 25 years. This is to cater for their education, such that it is not disrupted in the case of maybe the demise of the sole sponsor. So this one falls under life insurance.
Thank you very much. Any addendum? Someone wants to add or pass a comment on this one?
Just an additional to that, sir.
Yes.
Yeah, it falls under life insurance, just like my colleague has already said. I feel this one probably could be maybe the main principle, the person maybe has been injured. He used to get a salary, or maybe like what usually happens to compensation. Is it compensation? Yeah, compensation where somebody has been injured, and then yeah, you so now there's no maybe salary, you were getting salary, so now the insurance now start now paying, you were insured, so now the company start now paying some these responsibilities that we are taking, so they start now paying for school fees and all that for a certain period of time, because now that you are injured, or maybe something, or maybe a kind of illness, so probably it falls under life insurance.
Okay.
That's my
Thank you
understanding on this one.
Thank you very much for that one. So, as they have already put it, this one ensures educational continuity, for our children, isn't it? Oh, sorry, not for our children, for the children of a deceased person, right? The deceased insured. Yeah. So the benefits here is that it will just prevent that disruption of schooling due to the loss of income or support, that the child's future opportunities that the child actually has, so that they may not really suffer. That's what is going on. Okay. So,
Okay.
and actually, you might have heard there are some, we have released stories in our areas, within our our places where we live, that some people say, no, me, I used to be at a private school. Immediately my dad died, or Chan, we moved to a government school or whatever. By the way, I'm not blaming government schools that are now on point. Some people, some of us might have actually gone to government schools from day one up to now. We have even gone to the universities that are government schools, like UNZA, powerful universities, right? So I'm not saying anything about that. Okay, let's not really say going to government school. Let me say maybe it's even stopping completely school. There are people who stop school because maybe the people that were sponsoring them, are no longer there. Life becomes a bit challenging. So the idea behind this one is just to help our the children to continue school, so that they cannot really leave school out because you are not available. Ideally, we want the children to continue, having their school fees catered. They continue learning, okay, as long as they are below 25 years. So this is the idea. If a child below 25 years is below 25 years, the insurance company should take up the responsibility of paying for their school fees. Wow, interesting. Let's go to the hospital cash. How does this one work? Yeah, what are some of the comments on this one? Hospital cash. Anyone can turn on their mic and just pass comments. Hello? Hospital cash.
Just trying again.
Yes, you can.
Yeah.
Go ahead.
Yes, this one falls under health insurance, and yeah, probably the idea behind this is that maybe the principal, the person insured, is maybe might be sick or might be injured and is in the hospital, and in such a way it helps the principal to not to have that burden of where am I going to get some funds to go to the hospital. So the insurance is able to pay for these expenses that probably is being done by the hospital. So it's able to pay some medicines, it's able to pay for maybe a private place room where you, instead of to be muri bantu bambiri kintu wing like that, they can give you a place for yourself where they are taking care of yourself. So all those bills are being paid. That could be under health insurance. I think that could be my contribution on that one.
Inde Alungu, inde.
Yeah.
All right. Yeah, so thank you very much for that one. Yeah, exactly as he has already put it, it does cover those short-term hospitalization costs, so that you can cut that from coming out of your pocket expenses as an individual. It falls under health insurance. Yeah, so the cash is given to help you to cater the medical related expenses such as medications, transportation, and all that, all that costs related to that. So that's how it does work. Okay. Do we have any question? Those are needs that are being addressed. And this is the approach that you'd use to answer this question to get these marks that you were expected of getting. Part A. Is there any question, any comment before we go to B? Before we even cross over to B, have you seen that? What's your take on these same packages? They are all good packages, but it seems as if when you follow all of them, you may use all the money that you have to just pay for insurance. What do you think? Because you can pay. Can you think of this, Mr. Lungu? You pay for funeral cash, you pay for personal cash, you pay for groceries, you pay for school cash,
Yeah.
you pay for hospital charge, you pay for motor insurance, you pay for vehicle, whatever. Right? You pay for tax and the NAPSA, everything. Anyway, I'm not really campaigning. This is just a good thing, really. This is good. Insurance is really good. Should consider buying these package design. Those the mind. I'm not discouraging it, but they are really good. I just wanted to add this this junction and just have us reflect and have some fun. That was commercial break. Let's continue now to B. Distinguish between self-selection and ad-based selection in life and health insurance. In your distinction, you should use the above arrangements to explain how they may or may not arise in each. Okay, we use the arrangements above. So we have to explain how they may or may not arise in each and suggest a way to manage them. We should also suggest a way of mitigating self-selection and advocacy selection. So let's go. We start with self-selection. What is self-selection? What does the class understand by self-selection in light of life and health insurance? Self-selection. Hello?
Just to give it a try.
Yes, you
the
can go
word
ahead.
itself, it's about individual preference based on how you perceive a certain what? Certain insurance company. So based on your preferences and your own assessment, you choose to buy an insurance.
All right.
Maybe Madam Veronica Marinda can polish it up.
Yes, madam, you can go. She can go ahead and polish it up.
I don't know how to polish it up, but my understanding from what he has said is this self-selection happens when a person with what? who has certain or perceive certain risks choose to participate or not to participate in a certain insurance scheme.
Yes.
So this one is about a person making decisions, about decision making on what they believe is best for them.
Okay.
Yeah.
Thank you very much, madam. She has
Yes,
polished
let's
it
just give
up.
an example.
Yes, you can go ahead.
Looking at the products that we're looking at,
Mhm.
where we looked at the school fees, cash benefits. So maybe an individual, a parent with maybe young children would choose to purchase maybe school fees cash benefit product from the insurance company to cover for their children's future education. I
Yeah.
submit.
Thank you very much. Thank you. Someone wants to add? We are on self-selection. Okay. Thank you very much for that one. So as it has already been put by the previous speakers, here the individuals, they voluntarily choose insurance. That is just based on their perceived risk or the need, right? They perceive the need, they perceive the risk themselves and make their own personal judgment. Yeah. For example, those people who are healthier or they have lower risk, the lower risk individuals may choose not to enroll and purchase these products, right? Okay. Those that look at themselves, they check they like we are healthier, we may not really get into hospital to be whatever, you know, usually, especially the younger ones. Okay. So for example, let me give you an example of the young people that are health, the young ones that are health, they may choose not to pay for the hospital cash or even the personal accident cash, while someone who frequently maybe falls ill or they work maybe in a risky job, okay, a risky job, they may think of having that, just for an example, all right? As someone has said, those persons that have children, you know, you may want to do this one for children, for school fees, right? But what if all children are above, they have crossed this age, they are in universities, really? Would you need that? Then to those that don't have children yet and they are planning to have, it is debatable whether you can start now buying the product for your children or not. That is own decision, okay? Yeah, so that's what usually happens on that. So the management of this is done in such a way that the insurance companies, they encourage the group enrollment, okay? Insurance enrollment, or they can use incentives, right, for healthy individuals, okay? That is one way of managing this self-selection stuff. Yeah. So what they can do, if they use the group ones, or they can do some incentives, this would reduce the premiums that people are paying actually. When you reduce the premiums, people will be like, it's not even a lot of money that we are paying, so you can pay. You get the point? You just reduce the premium. People will be like, we are just paying a 10 kwacha, guys, every month. It's just a 10 kwacha. You get it? But at the end of the period, you find that it becomes a good amount of money. Okay, we have talked so much about self-selection. What about adverse selection? Adverse selection.
Yeah, just trying also on the adverse selection.
Yes, you can go ahead.
My understanding is this mainly occurs when one part has got more information This usually happens maybe in insurance. Just giving an example, whereby somebody does not disclose, maybe somebody is not feeling well, but he has gone to get the health insurance, but wow, he knows the exact that I'm not too well, maybe at a shortest period of time this person is likely to die, and then he doesn't disclose the full information about his health or about the situation. So he buys that insurance for the purpose of knowing that the things that is like to happen. So this is a situation where somebody knows exactly why maybe I'm buying that insurance, but the insurance company doesn't know. So that biasness whereby the other side has got full information, the other side doesn't have that information. That's what we call adverse selection. That also happens. Maybe somebody is, I think we have seen that maybe in somebody is selling a vehicle. The vehicle is able to move, but he knows exactly that this vehicle, even if I'm selling, there's a problem maybe for 2 weeks, for the period of 2 weeks, he will face some challenges with this vehicle. So in such a way, that's what we call adverse selection, knowing that the other person has got full information of what is the what is at hand. So just like I've given an example of this, also happens in insurance. Insurance companies, somebody buys an insurance, he knows that no, there's a problem, or maybe he knows that this vehicle there's a problem very soon, at a shortest period of time you would like to make a claim. That's my understanding, sir. Thank you.
Thank you very much. Thank you so much, Mr. Lungu. Any other someone wants to add adverse selection?
Maybe with an example, just trying to understand the term itself. So adverse selection, I'll give an example of a family that have got that are jaundice, sickle cell. Yes. So you know that the probability of maybe one or two children going to the hospital and being admitted there, the chances are very high. So in such a case, you secure yourself for example, from the products that we're discussing, you purchase the hospital, hospital cash, and also maybe funeral cash in the case of unexpected death. So what has led you to buy that insurance is the probability. The chances are higher that you might face in and out situations where you find that a family member is in the hospital, and to meet up with the cost, you buy yourself an insurance.
Okay. Thank you very much. Thank you. So as the speakers have already put it, it occurs when people, for example, of higher risk, right? You know, with higher risk, higher than average, of course, you know, they purchase insurance, and they, of course, by underreporting their true risk to the insurer. Okay, so they are not really going to tell them exactly what is going on. So in the above example, for example, a family with many children might, you know, it might even it might enroll in school for school fees, that one for school fees, and that one for groceries, cash benefit, and usually disproportionately, like not following the percentages. Then an older person, for example, with chronic illness, as I've already put it, may enroll just to benefit from, you know, hospital cash. All these things are usually happening. So now the question of the day is, how does the insurance company mitigate this? How do you mitigate this? What do you do to manage this? To ensure that people are not lying to you, that we are like this, we are like, what does the company do? or what are they supposed to be doing? What measures? Are we still connected? Anyone to confirm we are still connected?
Yes, we are.
Okay, thank you very much. So what they do usually is, for example, they're going to, they do what you call medical underwriting. This is where you assess the medical history during the application of the person. They check, they want you to provide medical, what's that, medical certification, where you show that you are okay, and you do screening. And most of these insurance companies, they really, they make sure that they prescribe the hospitals, yeah, where you can get this. Or if they don't do that, usually themselves, if they're into life insurance, they have their own doctor, they do their own screening, just to make sure that you cannot lie to them. And so that's how it is done. The other way of doing it is you can put waiting period, where you say there can be this period that's, you can't claim the benefits until this period is reached. All right. And sometimes maybe you can differentiate the premiums, where you charge higher premiums for those people who are higher risk. Okay. For example, when it comes to which one is this, for the hospital one, you charge higher premium for the older people, because older people are most likely, you know, to get sick. As you grow old, the health deteriorates as compared to the young ones. So you may not really need to charge a lot of money for the young ones. So all those are some of the measures that are really put into place. Okay. That was about that. Is there any question?